Good evening, everyone. Today is May 7th. This is the Nabwic Investment Club General Meeting. We want to welcome everyone who's here on the call today. And we will officially call this meeting to order at 6:33 p.m. Again, welcome, and we'll go through some quick disclaimers regarding this investment club meeting. We are a member of the Better Investing organization, and with that, we operate within their principles and guidelines for investing in stocks. All of the information shared on this meeting today is an opinion and should not be considered actual financial advice. We encourage all of our members to learn what they can from the organization, but definitely do their own research as it relates to investing in stocks. So we're going to call this meeting to order with the blessing, and I'll go ahead and get started. Dear Heavenly Father, Lord, we thank you so much for this day that you've given us. We thank you for this organization and these members who are interested in learning how to be better financial stewards for all the resources you provided us. We thank you for this time that we're gathering together in unity and wanting to learn more about investing wisely and being honorable in the resources you provided us. Thank you again for this time, and it's in your Son's Jesus Christ's name we pray. Amen. I'll go ahead and officially start the attendance with a roll call. Sharon Jackson, is she present? We have Nicole Allen, Vice President. Any other members, if you would mind introducing yourself?
Doretha Dennis.
Mia Ferguson.
Ann McNeil.
Carolyn Meadows.
Okay, do we have any guests in attendance today?
Zelda Okia.
Perfect. Any other members or guests? Okay. Well, we'll start with a motion to approve the minutes. I believe our secretary, Doretha Dennis, has provided those minutes for our review prior to the meeting. So can I get a motion to approve? Oh, I'm sorry. This is to approve the agenda. My apologies. I thought it was meeting minutes. Can I get a motion to approve the meeting agenda for today?
I make a motion to approve the agenda for today.
Okay. Can I get a second?
I'll second.
Okay, it's been motioned by Doretha Dennis and second by Mia Ferguson. All of those in favor, say aye.
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 Any opposed? Okay, the motion carries. All right, so we'll officially get started with a review of the reports. Take it away, Ms. Dennis.
Yes, I sent out the secretary's minutes. I did not get any corrections sent via email. So, and I think all of the members had enough time to review them, Madam Vice President.
Okay, well, can I get a motion for the approval of the secretary's minutes?
Motion to approve the minutes as presented.
And can I get a second?
Carolyn Meadows, second.
Okay, it's been motioned by Mia Ferguson, second by Carolyn Modest. All of those in favor, say aye.
Aye.
Aye. Any opposed? The motion carries. All right, next we'll have our treasurer's report by Mrs. Carolyn Modest.
Can you share it, please, if you can? I'm looking for it. I'm still on the road. So,
Dorita, are you able to share the
I'll look for it
treasurer's?
now.
Okay, thank you. If you wouldn't mind, if you have some just highlights that you'd like to share, Carolyn, please feel free to do that as well.
I know one of the questions was asked, what is the assessment for 2026? So so the members who are in other organization and their membership is paid there, that will be 170 for this year. And for the 3 members who pay, we'll have 4, because we are again Mia's paid with 2, which the $45 will be added on. So the assessment will be 215, and that will, so I just wanted to share that information because it was not clear in the beginning. We still had some ups and downs on what it's supposed to be. So now we know that the members will be 170, and the members that pay their membership through the club, you will add $45 to it, so it becomes 215 for the year for the 2026 assessment. And we also have in the bank as of April 30th, 2026. Since we don't have it, I'm just assuming that it will be $1,605. And the cash in child squad is $2,132. And our portfolio for the ending of April was 15,000. I'm not sure the exact amount because I'm pulling the information from memory since I do not have, I'm driving, so I cannot really pull the information. But before the end of the meeting, I will send over, or after the meeting, I'll make sure that everybody get a copy of it because I send it to the secretaries and the president, so they will have a copy of that. So I apologize again for not having all the information or not prepared for it. So I'm just pulling out stuff from my head. And that's it. I already spoke to everyone who, in reference to the membership dues. I spoke to members who are due, and I'm just saying in reference to the assessment. If you want to make partial payments, it's fine because every payment is being recorded in the iClub, and I also keep track of the payments. And that's it for the treasurer's report that I presented today. Thank you.
Well, thank you so much for that, Carolyn. Are there any questions regarding the treasurer's report? If not, can I get a motion to approve?
And McNeil, motion to approve the treasurer's report.
And a second?
Dorita Dennis, I second.
It's been motion and second by Ann McNeil and Dorita Dennis. Are there any questions? All those in favor, say aye. Aye.
Aye.
Aye.
Any opposed? Motion carries. Okay, it looks like our president, Ms. Sharon Jackson, has joined the call, so I'm going to officially turn this meeting over to her, and she will transition the rest of the reports. Thank you for joining, Sharon.
Awesome. Thank you so much for taking you did a wonderful job. I appreciate you. All right. So we're down to the portfolio manager's report. And both Doretha and my name is there. So Doretha, would you like to start us off?
Absolutely, absolutely. We get our reports from My iClub, which every member has access to. And mm, our treasurer always sends us a unified report. She sends us a valuation statement, which covers all of the stocks that's in our portfolio. Today, I'm going to take a quick look at the company size, and I think I'll share this screen. Um, I think this is it. Okay. Yes. Let's start with the company size. And we have only two small companies, that's Millrose and Qualis. We have several mid-size, two, four, six of them. Large, we have three of them. And then we have Disney, Facebook, Amazon as our mega companies. You want to always have some of those in your portfolio. The next report, sector and industry. All of these companies fall in a particular sector and industry. We have consumer secular that's um, applied. I think manufacturing. That's Gildan activewear. Internet. We have home building. We have capital marketing, real estate, specialty drugs. Um, that's Zoltis. And then uh, electronic we have electronic gaming, entertainment, internet, oil and gas, that's Cactus. Then we have applied software and the internet, infrastructure software. Those are our sector and industry. That's our report for the sector and industry. And then I'm just going to show just one more, our portfolio summary. Let's take a quick look at that. It shows here the ticker, the company, the price, date we bought the stock, and it shows the PE ratio, the current PE, and a recommendation of buy and sell, which we need to work on. Sharon, you said you had one or two that you wanted to look at today. Let me,
Could you go back to, you're right.
sure.
Could you go back to, yes, it's portfolio reports and
Okay.
sales growth.
Okay, sales growth. There we go.
Now, go down and see the pie chart.
Okay, there we go.
Yeah, that's it. So you know that that better investing has what sales should be for small, medium, large. And what's good to look at this uh, every once in a while is to look and see how well our stock are doing. Small are supposed to be, because they are small and they are doing just rapid growth, they should be anywhere larger than 12%. Well, we only have two small, and that is, and Doretha's already told us, MRP. I don't know where it is on here, but
Yeah.
I know it's on there because I saw it earlier. MRP, because it is growing at greater than 12%. And the other one was
Qualis.
Qualis,
Mm-hmm.
right. And Qualis is supposed to be growing at greater than 12%, right? According to this, it's only 3.5%, right? So that's something that we're going to have to look at.
Mm-hmm.
Then we have Cactus, Gildan, Zoom, Electronic Arts, and Zoltis that are our medium, which are supposed to be between 7 and 12. Gildan is up at the top, right?
Mm-hmm.
And that falls within, well, it's 7 to 12, and it's, I believe it is 5.2.
5.2.
We need to look at that.
Mm-hmm.
Then we have Cactus. Is Cactus WHD?
Yes.
Okay. That falls within the category. Zoom is only 4.8%, supposed to be
Mm-hmm.
between 7 and 12. So we need to watch Zoom. We'll talk about Zoom later. Electronic Arts is in there, and Zoltis. Zoltis is just barely in there. Okay. Now, Schwab, we know, large, we know because as the company gets bigger, it takes a lot more to make their percentages. And so that's between 5 and 7. And I think Schwab is in there. Lennar dropped a lot. Lennar is actually exceeding because there it looks like it's 10.5. Uh, we'll talk about Lennar later. CBRE is in there. I think all of them are in there except maybe Disney. Um, no, actually, even Disney is in there. So that is something that it's just another qualifier of information about how well our stock is doing. I am sorry that we have not been looking at this before, but it's really,
Mm-hmm.
really, really important. The other thing that Doretha brought up, and she was looking at company size. We know that the BI regulations are 25% small. We only have like 4%, 50% medium. I think medium is only like 25%, and then 25% large. And our portfolio is like over 50% large and mega. Now, I don't feel so bad because in listening to other clubs, they're not so specific in those regulations anymore. But we need to start thinking, obviously, about how we're going to start trying to comply. Now, the reason why I want to make sure I say this carefully is that our large and mega are the ones that are really making the big money for us in the club.
Right.
So as we look at our stock, we may want to trim some things, but we definitely don't want to get rid of them. Amazon is major in our stock portfolio. We may want to trim that a little bit, and we may want to use that money to buy something else, but never get rid of it because Amazon is big. All right, those are the only things that I wanted to bring out, Doretha. Thank you so much
Awesome.
for your patience.
Yes, awesome, awesome. And thank you so much for sharing that. And that is something we really need to look at. So, Madam President, that's it for the manager's report, unless there are questions or comments from our members.
Doretha called the question. Well, let's do this. So, uh do we accept the portfolio manager's report?
I make a motion that we approve the portfolio manager's report as presented.
Awesome. Thank you so much. Is there a second?
And McNeil second.
Awesome. Thank you so much, Ian. Now we can call for the question. Does anyone have any comments or questions about the portfolio report?
Well, I did have a question about allocation. I think you had mentioned early on we're probably a little bit top heavy with some of the stocks, particularly Amazon and companies that sort of align in that industry. Do we have any idea as to how or any proposals on rebalancing
So we
the
probably need
portfolio.
to look at if we had the SWAB report up. I was looking at the SWAB report earlier, and when you said rebalancing, it I don't think that we need to uh be specific in terms of 25, 50, 25. But
Mhm.
like I mentioned before, we may want to trim and sell a few shares of Amazon. Oh, you know what? Do you still have iClub up? We can look at the iClub report. We could trim some of our shares, particularly like Amazon, um, because of, and this is kind of brings up an issue, because um, I want to say Facebook, but I know it's Meta.
Mhm.
Because it is so much, we only have two shares, but it's a major part of our portfolio. What do you do with that?
Mhm.
We only have two shares. So if when as we look, we may want to look at, taking trimming a little bit of definitely of Amazon.
Okay. Amazon's been really good to us though.
Yeah, I
And
know it.
that's the only thing. Like if you have a stock that's really been doing really good in terms of gains, um, like is there a real value, even if it's over allocated
Yeah.
and it puts us out of balance? Is there a real value to us on the back end in reducing the amount that we own in that just for the sake, and I'm not saying that's what we're doing, but hypothetically, if we were doing it just for the sake of aligning to the BI principles.
I don't know. Right now it makes up 16% of our portfolio. And
Okay.
I'm not saying sell it all. All I'm
Hmm.
saying is that you might want to take some of that money and buy more stock.
Okay.
Yeah, and I'm not talking about, doing major because literally we only own 10 shares. So, I'm just saying we may want to trim it and we may want to, I mean, this is a discussion for the whole group, but I've seen other groups that just trim just a little, put that money in there and buy more shares of other stock. That's all.
Okay. Thank you. I
All
appreciate
righty.
that.
That was a good question. Are there any other questions? Well, then let's call the question. Uh, accept, everyone that wants to accept the portfolio manager's report, please say aye.
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 Aye. All right, that was like three ayes, but that's okay. So this is the next thing on the agenda, right? So we have done all the reports. Secretary, treasurer, and portfolio. Now, are we going to, who is prepared to give an update on their stock? Qualis is up first. Oh no. Uh, and I don't know if Ann is in a position to be able to discuss Cactus or Amazon.
Yeah, I have the SSG sharing on both. Unfortunately, my laptop, I lost Wi-Fi. So if you can just come back to me, give me a couple of minutes.
That's totally
Uh,
great.
yes, thank you.
And Carolyn, I'm assuming are you still in a position? Are you in a position now that you could talk about CBRE or Walt Disney? We'll come back to Carolyn. Mia, are you in a
No,
position to talk about?
no, not in a position to do.
Thank you.
You're
Mia,
welcome.
can you do Facebook and electronic arts?
Sure. I have done a SSG on both of these, and I actually did some research through Yahoo Financial, And just have a quick feedback for the two of them. Facebook is doing well. They are still strong. One of the largest cap growth stocks right now, and investors are just looking at buying more of it. It's expensive, but it's doing extremely well. So my recommendation on it is either to hold and or buy more if we can afford it for
Okay.
Facebook.
Okay. I'm going to
And
ask the next question.
yes, ma'am.
You say buy more, but what's the
hmm
recommendation? What are you putting out there? Buy one more share, buy, you know,
Well,
I'm taking notes.
I'm not sure what our financial, I was going to look at that on the financial report. I haven't seen it, so I'm not sure what financially we can afford. But if we can, look at buying, because I think we only have 2 shares right now of Facebook.
Right.
So if we were able to, at least purchase another share, then it's something that's continuing to grow just because it's strong in the AI enhanced advertising and all the things that's going on with the advancements in technology. That it's definitely ahead of the curve and gives us a strategic edge on if we purchase another share with where the market is trending right now.
Okay. I've taken the note. And when we go through all the reports, we'll go down the list and we'll vote up or down for buying another share.
All right, sounds good. And for Electronic Arts, EA, they're stable. They're very stable. I did pull an SSG. It shows that they had a slight well, I'm sorry, let me go back. Their sales are stable. Sales are stable, but their earnings per share did kind of have just a slight decline, but it's been pretty stable. It is considered stable. And with that being said, I did, just also go to Yahoo Financial and look at some information that they had on there. And they're just their recurring revenue is what's really helping them out. And what it is that they're having with the sports franchises and the live service gaming and all the different platforms is what's really helping them. So it's not a bad um, it's not a bad strategy that they have going right now. It's maintaining its stability. I think that we continue to monitor it just um, in the economy that we're in right now because people are, letting go of a lot of things that they have. And I think that might be why we've seen a slight decline in what's going on. So my recommendation on that would just be to hold right now.
Okay. Awesome. Very nice. Thank you so much for that. Any
No problem.
questions for Mia? Very good job, Mia. Listen, Nicole, uh, I I am gonna have some words on Melrose Properties. Do you want to give us an update on Gildan?
Sure. So I did do an SSG on Gildan, and um, we've had Gildan for quite a while. It's been one of those steady, growing, slow-moving, semi-boring companies, and so it's not really done anything significant. Um, the SSG, however, based on the sentiments and the analyst estimate, really puts it in the sale range, but I'm kind of pushing back on that just a bit. In my research, Gildan has they've been really strong at generating cash. Historically, they've been profitable and efficient, not over exorbitant. And then they've really integrated themselves well into manufacturing, and that gives them a little bit of stability. Some of the recent earnings itself was pretty strong, which reaffirmed that they're a really strong and stable company. Now, the analyst seems to think that it's a buy, even though the stock prices has been a little bit below over the last 6 months. It's been below the targets. And even like I mentioned, my SSG suggests that it should sell as well. So here's what I did. With the historical earnings per share, just using the analyst estimates, I put in an average historical sales rate of about 13%. Analysts were suggesting 55. Now, that may be due to some short volatility, but using the sentiment analysis, it got me right around 12, 8 to 13%. The historical earnings per share was around 17%. Analyst puts it right around 15 and a half. Using that, I was able to establish both a high and a low PE ratio. My high PE was around 18, which was right in line with the analyst estimate. But my low PE, I increased it a little bit. The analysts were suggesting somewhere around 10.5%, and that was really based on the 5-year low PE average. I pushed it up just a bit to about 11 because I believe the steady growth and the more recent 5-year average would probably be better suited for this model. Now it puts my sale range right at about $55.90 to $68.20. Right now, today, I believe the stock was trading at 61.30. So it's right in that space to sell. But like I said, I like Gildane. It's been an underdog, but constantly performing in terms of its sales. It recently increased its dividend, and I really do feel like there's nothing surprising that's going to, I haven't read anything that's going to surprise you about Gildane. I mean, it's cyclical because of the nature of the business, but my overall opinion is that it's steady for an apparel company. It's reasonably valued, and the dividend, which is steady and could see some upside. So my recommendation would not be to sell, but to hold. I think we need a little bit more information surrounding the analyst estimate and why it's conflicting with the analysis and the general sentiment from the BI investors. So my recommendation would be to hold at this point.
Okay, awesome. Thank you so much for that. Well,
Mhm.
I didn't see Valencia. Is Valencia here? Okay,
I do not see.
I'm bummed because I was really looking for the report on Zoltis and Lennar. What was interesting about Zoltis and Lennar, I'm not prepared to make a full report, but Zoltis, as I understand, is one of these things for pets. Um, and they have made money. They have just been gangbusters. With this economy, shows its first crack in terms of people pulling back on buying exotic stuff for their animals. The big deal is that people are starting to make animals people. They're personalizing them, and they're spending this exotic amount of money on their dogs, on their cats, on their whatever they have. And this economy has really thrown a blow to Soltis. Just was interested to see what Valencia was going to say. Same thing about Lennar. I'll say something about Lennar when I talk about MRP, Melrose. Lennar has been a big winner for us. In this last quarter, it dropped like a rock. Now, the flip side of that is um, um, Motley Fool. Motley Fool said, you need to double up on, he said, Lennar is one of those that's going to come back. And if you own Lennar, you need to buy more before it starts coming back. So I was really, really looking for a good report on Lennar and Zoltis because those two are going to be interesting. Um, okay, so that jumps to me for Charles Schwab and Zoom. So Charles Schwab has been another really good one for us. What I have for Charles Schwab is what I have for Charles Schwab, it is it closed at 92.15. Now, Morningstar says that its fair value is actually $114, right? Its closing value, I believe today, was 92.15. They're saying it's real fair value, that it's undervalued, that if it were at value, it'd be $114. They give it a A plus strength. Value Line says that in 18 months, they're saying that its target price is going to be, they're looking at the same thing as Morningstar. The target price in the next year is going to be $114. They're saying that in 5 years, it'll be anywhere between 125 and 190. It's revenue for the next 5 years is saying Value Line said this, and I also believe when I looked at the sentiments, they also said the same thing. They said, now realize that Charles Schwab is one of our large. The revenue is going to be 8.5, which means it is above the requirement for a large. It provides an excellent dividend, 12%. That's another thing, excellent dividend. EPS is 6.5, which is good. Sentiment said 10, but um it's up straight, so it's been doing very well. The PE is in a good place. Value Line said that the PE should be around 23. If I think I did of course, I don't know where it is now. I don't know if I could pull it up right fast. But I did the low PE is 15, and it was definitely a buy. I'm sorry. It is definitely in the buy. But Charles Schwab is another one that it's large, that we already have 10 shares. And so I am suggesting a hold, not to buy any more Charles Schwab. Zoom, on the other hand, oh, I know what I said. If it weren't large, I would recommend buying more. We already own 15 share. So that was my note. So if you're in your personal portfolios, you may want to look at owning Schwab. I'm going to look at it. Now, the next thing is, I believe for me, is Zoom. We have 6 shares. Now, Zoom was interesting because there was a lot of mixed comments regarding Zoom. Its closing value, I believe, is $108.64. It was about that. But Morningstar says that its real fair value is $95. And in reading a lot in Yahoo Finance and in several others, it sounds like there's going to be in the next probably 12 months, there's going to be a major pullback from the 108 down to, they're all saying about the $95 mark. So it still has a financial strength of a V plus, a B plus. They meaning Value Line is still saying that 18 months probably will still be at the target price is going to be $119, but they're saying in the 5 years it could fall to $95. And then what they're saying is that Zoom is putting on, they know that they've been operating in the sweet spot for the last 5 years, 6 years. And what they're trying to do is get larger customers. They accelerate in the small customers. They're easy to use, people like it, it's a known entity, but Google is coming after them, everybody is coming after them, and that's what they're saying. They're playing in the field with the big boys. And Value Line was saying that it's going to be hard. Not saying it's not a good stock, not saying, they're just saying it's going to be hard. But I would not recommend selling, because usually you try and look at least 3 quarters to see what the deal is going to be. Right now, they're still heading up. They're still up straight and narrow. And I say naturally hold it. Let's continue to watch it, and let's watch the quarters. And once it starts uh, losing value, once it starts trending down toward the $95 and hitting the value for the 3 quarters, losing value for 3 quarters, then we should look at trying to sell. But right now, Zoom is one of those just holding on and doing what they need to do to try and survive. Um, Great company. They do not provide a dividend. Um, so that's all I really have to say about Zoom. I'm not making a recommendation. Well, my recommendation is naturally to hold it and to monitor it for the next 3 quarters, because right now it's showing that it's very strong, but there's a lot of conversation. It's a mixed bag in terms of what's going to happen in these next 5 years, because they're saying that they're playing in the field with the big boys, and they're coming after Zoom. All right. So that was all I had to say about my two shares, my two stock.
I did
So
want to
you wanna-
add, I did see some similar communication around the expansion of Zoom as an enterprise sort of platform for larger businesses, and they really haven't penetrated that market share. I think what these large organizations were looking with is more of an integrated platform. So you're looking at things like Microsoft Office and, like you mentioned, Google, who already carry these meeting platforms that are now more advanced with AI, more integrated into scheduling of meetings directly from your calendar, or being able to do white notes and whiteboards and things of that nature on your meetings, transcribing and all of that. And so I would agree that it is a sweet spot for small companies, because 100, 200, $300 a year for a video meeting platform is really good for small businesses. But these enterprise clients who are running multi-million dollar companies are not seeing that real value. And then I can say, I have seen a lot of bugs in Zoom lately, and some of my colleagues too. I mean, we've switched over to other platforms because I guess in its expansion, they're still trying to figure out the capacity of the storage or whatever the programming is. But I've experienced a lot of bugs in the system, a lot of system crashes, and transcriptions being lost and things of that nature. So it's interesting that it's holding its value and maybe even growing in that time frame, but there is an expectation that that ship is going to sink at some point.
Right.
So
Exactly right.
thanks for sharing that.
Yeah, that was a good point. And I appreciate that additional information. It just brings, it just support. All right. So, so that is, oh, I'm going to swing back around, because I think Anne wanted us to come back to her. Anne, do you still want us to come back or move forward?
Yes, I'm good. I'm not sure if you can hear me. Sharon, can you hear me okay?
I can hear you. Your
Okay.
voice is very mild, but we can hear.
Okay, all right. So I have the two stocks, which is Amazon, and I'll go ahead and share screen. Not sure. I can capability. Okay, so can somebody make me a co-host on the other end of me, co-host, so I can share?
It looks like you're
Uh,
a co-host.
I'm on here twice, Sharon. And thankfully, because I lost Wi-Fi, I'm here real now. So y'all just
You're
just
good. You're a co-host on both now, Ms. Ann.
okay, perfect. Thank you so much. All right, so this is just a quick update, and we've had a lot of conversation about Amazon, and this is the just an update on where we are now with Amazon. Sure, if you can see the screen, right?
Yes.
Yes.
Okay. All right. So very well. Uh, I've updated these forecasted numbers based upon the sentiment and some other research. And so just a quick uh, update on the conversations that we've had. On the front side, we see that there was a dip in 22, but going back to, let's just back here for those who may be familiar with Amazon, as we can see here, it's a leading online retailer and marketplace for third-party sellers. Retail-related revenue represents approximately 74% of its total, followed by Amazon's web services of 17% and advertising services of 9%. International segments constitute 22% of Amazon's total revenue, which is led by Germany and the UK and Japan. Interestingly, the backside of this company, and I'm just going to go straight down to the fact that it is showing as a buy, and I know we've had some conversation early on in this call about the percentage of ownership, and so if we're to make a suggestion as opposed to buying it, I would suggest we may want to consider trimming it, going to the recommendation, the conversation that was held earlier about taking some of the money from this and some additional stocks, or putting it in some other stocks because it is doing extremely well. So the projection here is to buy. It is in the buy zone. Let me just make that suggestion. I'm not making a recommendation that we should buy it, but I am suggesting that we should consider trimming it, keeping the stock, trimming it, taking some of the income and redistributing it to some other stock to give us some more cash. Let's see, company. This is the same thing in terms of where the stock price right now is as of today, yesterday, is at about 274. 2-week high was at about 278. 52-week low, as you can see from the screen, it was about 183. So it's at a high, if you will, compared to where it's been. I will go now to, I'm not sure if there's some questions about this stock before I go to the next stock.
No, good job.
Okay. All right, so let's look at Cactus. And even though I inherited this stock, again, a very good stock, if you will, in terms of what it is doing. Cactus is engaged in the designing, manufacturing, and the sale of well heads and pressure control equipment. Its principal products include Cactus Safe Drill, wellhead systems, conventional wellheads, and valves, among many others. The company also provides mission critical health services, including service crews to assist with the installation, maintenance, and safe handling of wellhead and pressure control equipment. So the bottom line is that the company is, we'll go down. I used the sentiments and also some additional data from some other research And going back to the backside, again, just like the first stock, it is in a buy. I'm not suggesting, because I think we right now, I think when I look, I think we already have about 20 shares. Just make sure. I think we are holding about 20 shares of the stock. So as opposed Cactus, we are holding,
Yep, 20 shares. You're right.
20 shares, right? So again, the stock is doing well. That's a quick update. I'm not suggesting buying. I would suggest we continue to hold it. But again, quarterly earnings and reports will come out. At the end of June, we can look at it again. But that would be my update. And if there are any questions.
Good job. Any questions for Ann? That's pretty good. What time is it, Ann?
Right now I'm in Rio and it is 8:24.
Oh, it's not bad.
Nope.
That's not bad. I was getting ready to give you a compliment for sticking with us so well.
Please, I struggle, but I'm good. Thank you. Glad to be on the other side of the world.
Okay.
I'll stop sharing things.
Okay, that was a good job. All right, let me look and see what is next. Okay, so I'm assuming Carolyn is not going to come back. And so let me talk to you all about for a few minutes regarding NPR. Hold on. Let me see.
Before you do that, Sharon, let me give a quick overview of Qualis. I wasn't going to do this, but because it is one of our stocks that has the largest loss in our portfolio. And even though they are making money every single quarter, big money, I'm still just a little bit concerned, and I wanted the group to look with me at a few things that I'm looking at. So let me look first at this at our. Let me just go back to the portfolio's gain and loss statement and look at Qualis. We bought it in 2024. We only have 5 shares, but we have a loss of 36.2%. And that is my concern. And each month when we give an update, that's always my concern. So I say, let me let the group help me look at this particular stock and see should we do today. It is one of our smaller, there are only 2 of them in our portfolio that's in the small category, and Qualis is one of them. 5 shares. And Yahoo says that if you're new coming in, this would be a good stock to buy. They give them a B++. They've had 10% gain in revenue, 669 million. Earnings per share, 17% increase, $5.44 a share. I thought that was really good. They have opened a new device or a new platform where they are a cloud security and compliance solution provider. And they have a lot of different companies under them. They range from the health industry, let me just take another quick look. Let me see, the health industry, lots of businesses that use them for cybersecurity, and over 10,000 customers worldwide. They are just a very good company, but I'm still struggling with this 36% loss. So let me see what else I want to tell you about it. This new platform that they have built and using. They moved into the AI sector where they're using it heavily to help them with looking at companies with vulnerabilities and using that data to show the companies this is the money that you're losing because of this vulnerabilities. Um, and so they, like I said, they're still making lots of money every quarter. But my concern is just this, and this, they have a great SSG. Can you see the front page of the SSG, how they have grown? Can you see this, or do I need to stop share and share again? Let me just do that.
We can see it.
Oh, okay, sorry. Okay, so yeah, let's look at this front page of the SSG. The sales are up, uh, the the earnings per share. The analyst has for sales of 7.6, earnings per share of 2.9. I usually would go with the analysts and the sentiments. They are basically about the same. They're running neck to neck, 8%, 8.0% for sales, earnings per share 6.2, a high PE of 28, a low PE of 18, a low price of $75, and a high price of $224. Now, so help me. I don't, I wanted it to say, let's sell because of that, or sell a couple of shares of it because of the loss. But because they've made so much money over the last quarters, and even for 2025, they made a lot of money, a lot, millions of dollars. So I want to hear from the members about your feelings about Qualis.
Doretha,
Yes, ma'am.
yeah, while you were speaking, I just went to Google and Googled why,
Mm-hmm.
why are they losing money? And I'll just read what it says. I can share it on the screen, but I can also just read it. And it just basically says, one of the comments is basically says the Qualys stock has faced significant downward pressure in 2026, trading substantially before its 52-week high, primarily driven by a weak full year 2026 financial forecast and intensifying competition, despite beating quarter 1 2026 earnings expectation. That's from Yahoo Finance. And
Mm-hmm.
key reasons for the decline as of May include weak guidance and slowing growth. The primary driver for the stock's decline has been management's guidance, which signaled a deceleration in revenue growth, specifically pointing to a 7 to 8% growth for 2026, down from the 10% growth reported in 2025. That's number one. Number two, an AI disruption fears. Investors are worried that AI native tools, such as Anthropic's agent AI, will make traditional vulnerability management tools a core part of Qualys' business, less relevant and disrupt the industry, leading to a sell the news reaction to the stock. And then finally, and I'll just read this one last, analysts downgrades, and caution. Multiple analysts from JP Morgan, Morgan Stanley, William Blair have cut their price targets and maintained hold or underweight ratings, citing concerns over flat billings growth and doubts that Qualys AI initiative, True Risk, will accelerate growth soon. So I think your gut feeling is probably not probably, but definitely justified. And so if you want to make some recommendation, sell part or whatever, we can consider that, and either watch it or take some kind of action today. But that is what is being said in the market. Thank you.
Thank you. That was really good. Are there any other comments?
So I'm
Sharon?
looking at
Okay.
Morningstar. Morningstar says that its fair value right now is $139.
Mm-hmm.
And Value Line says that these shares are ranked to outperform the broader market in the coming 6 to 12 months. 6 to 12 months. That's all they
Mm,
say.
mm-hmm.
Although Qualys is growing and profitable, the main question now is the extent of the future growth. This is going in the same direction that Ann just gave us.
Right.
Okay. And so we know we have at least 6 to 12 months that they're saying that Qualys is going to beat the larger market. But they're saying after that, it might be questionable.
Mm,
So, I mean, yeah, I mean, it value line. See, I mean, there's a lot more in here, okay, and
mm-hmm.
they're really very high on the stock. But the question is, how long? You know, it's one of those things that you watch. Um, and just like that, you said they're talking very highly about the Risk Operations Center ROC that was
Mm-hmm.
just
Right, right.
and I'm trying to see. It says that the rock represents a fundamental shift to a proactive cross-fundamental tool that integrates all vulnerability data into a
Mm-hmm.
central hub on a single platform. Okay, so anyway, they're basically saying this has been a big launch for them, but they're saying that they're going to beat the market and they're going to beat the market in the next this year, 2026. But you know, it's questionable after that. So
Mm. So it seems like should we hold it until we get farther down 2026, or should we be looking at doing something with it now? Did anybody else have any comments? And Nicole or Mia, Carolyn, you have any comments to share on Qualis?
Yeah, I've been looking at Qualis on and off for a while, and I just don't know enough about it. I'm not finding enough research to kind of make a decision on whether it's a buy or a hold. But this presentation was very enlightening. It's a lot of
Mm-hmm.
information that I just hadn't really heard. So I would probably, my- if I were to recommend, it definitely would be to do further analysis on it before we make any quick decisions.
Mm-hmm.
Yeah.
Mm. Yeah, yeah.
I think overall, right now, the market is, I don't know, the market is, it's, well, we all know that it's volatile. You know,
Mm-hmm.
we've seen that, and there's just so many impacts, and it's really hard to distinguish whether or not there's some if if there's a when we see increases, is it really the growth of the company, or is it this juxtaposition that we're in that gives it these short-term highs and these short-term lows. So um and I think Qualis, because that's one that we bought last year sometime, and it came in
2024.
really good
Mm-hmm.
recommend. We bought it in 24, right?
Yeah, yeah,
Okay.
yeah. Mm-hmm.
Yeah. It came in with really good recommendations. I haven't seen anything, like I mentioned, that really is giving me enough confidence. Similar to what you recommended for Zoom. I think we need time.
Mm. Yeah. Okay, so for now, my recommendation would be just to hold it for now. And let's look at this new platform that they've established where they are bringing all of their data to one platform and allowing AI to help them drive the recommendations for them. I'm going to say let's just hold, and I'll come back next month with more information if it's out there, and then perhaps we can make a recommendation then, unless there is somebody else who wants to make a recommendation about selling it.
We're going to
Okay,
wait for
Sharon.
your recommendation.
Okay, well, my recommendation is just to hold until next month.
Okay.
Uh-huh.
Righty then. Is there anyone else that wants to share? Okay. Then, if it's okay, can I do Milrose?
Absolutely.
Alrighty then.
Yes.
So, tell me, can you see?
Yes, we can see.
Yeah.
All right. So, you know that last year, I believe, we received 5 shares of Milrose property, and we received them from an issue that Lennar was having. So Milrose Properties has done really well for us. It was 5 shares. It is a small company, but the problem is you can't, it is a REIT. Hold on, I'm getting ahead of myself. So, uh, Milrose Property, it is a REIT. It's residential. It is small. Morningstar has given it a financial health grade of a C, and it's a holding company of land. It it This is what it does. Mineral Properties buys and develops land. It carries the financial burden so that larger companies like Lennar don't have to hold land in their portfolio, right? They just go and get those pieces of properties from Milrose. It says let's builders like Lennar pull lots as needed over time. Milrose earns its money from reoccurring options fees, development income, and lot sales profits. This creates a steady contractual cash flow, uh, not just from speculative land flips. Now, Milrose is it is one of those companies that it has just been zooming up. It is a different kind of REIT. There are other kinds of REIT, but they have been growing like a weed. Now, the benefits of Milrose, and I meant to go and look at Schwab to see how much we actually make. They have a gigantic dividend, and they are one of the first major public land banking REITs. Now, there are other REITs, but the other REITs that I saw don't quite do it the way that Melrose does it. The other benefit is that the big thing in the US right now, our economy has everything topsy-turvy. But one of the things that has been an issue for a while now is that housing demand in the US, there is a shortage of housing, major shortage of housing. And now, while our investment club missed the major jump, we got it at when it didn't cost a whole lot of money. It's now up around $28, but there was a major jump. Now, there is still upside in buying Melrose properties. Now, the reason why I'm doing this the way I am is that Milrose Properties, you can't do an SSG on it. Now, you know, as BIers, we like to see SSGs. To do an SSG, you have to have more than 2 years worth of growth, right? As it's not happening. So you kind of have to look at all the other information. Now, these are the risks surrounding Milrose Properties. It is heavily dependent upon Lennar, how well Lennar does. And we know that to be true because Lennar, uh, it is a creature of Lennar, right? And so the thing that I think that I may have said it, is that Lennar had a significant downturn in this last quarter. Significant. The price dropped like a rock. I'd said it before. I didn't write it down. Otherwise, I would have told you how much it is. Um, but Lennar has dropped, I think, down into like the $90 a share, something like that. But this is what, and I'm starting to repeat myself. An article that Motley Fool wrote just within this last week said you need to double up on the price on Lennar while the price is down. They said Lennar has been in this position before. It will come out. It is a strong company. Now, the other thing about Melrose Place that is a risk is naturally the housing market sensitivity. Mortgage rates may increase, but not right now. A slowing down of construction, and there has been a slowdown in construction, and land values may soften. Now, this is one of the things that I know. I still have my hold on to my little house in West Palm Beach. And up until last year, I must have had 10, 15 people calling me about this house every day. That all stopped in the last 6 months. But I noticed in the last 2 weeks, people are starting to call again and texting me and emailing me. Are you interested in a cash sale? So land values did soften. And I think that people are now starting to realize it is time to get back into the saddle. Now, the other thing, and I've mentioned this several times, and I can't get away from it, is that it is not a normal BI investment because we do things based on growth stock that have been in something that you can do an SSG on. You cannot do an SSG on Lennar. I'm sorry, on Melrose. But this is the great thing about FinBiz. Did I say that right? Yes. When you do pull up, you may not be able to do an SSG, but FinBiz does a review. And regardless of everything of what the rest of the SSG says, FinBiz says it is a strong buy. They're saying it may only be $28 as of today, but they're saying the target for 2027 next year is $35, the average target. And this is the average target. And believe that Yahoo said that the 1 year target for them was going to be $38. And FinViz says that the high target will be 40. So this is what they're saying. Strong buy. And those are the target marks. Right now, it fell down to 28%, $28. But they're saying that it's a strong buy, and those are the target prices. And it fits in with what Value Line is saying also. So I have that historical sales, and I say historical sales, but we're only talking about 2 years, has been 17%. The industry average was 6.4. And so I'm making this recommendation to buy a minimum of 5 shares. It's not a lot of money. It's like, what, $150, something like that. But the other reason why I'm saying to buy this is that it is, even if you buy additional 5 shares, it's still going to make up a very small portion of our portfolio. It's not like it won't change the balance, but it will create value. Value in that it does have a very strong dividend. Value in that right now we're holding shares for $28, but it's going to go up to, around $38. $38 from Yahoo, I think it said, and then $38 it said again, verified by viz. Okay. And so that is my recommendation. Actually, my recommendation is to buy 10, but I'll go with 5 if anybody is willing to go with me. All righty. That's all. I don't think I have anything else to say.
Is that a motion, Sharon, you want made?
Yeah, I'm going to put this as a motion. Well,
Well, you
well,
can't put it as a motion. One of
I
us
can't.
would.
I said
So,
recommendation.
yeah, but I'm
And
asking, do you want us to make a motion
yeah,
to, all right, I
absolutely.
make the motion that we buy 5 shares of Milrose Properties.
I
And I
second the
second.
motion.
Okay, go right
Oh,
ahead.
mhm.
Yes, Nicole.
Yeah, I second the motion.
All righty. Is there any more discussion?
You know, when you told me about Milrose, I was like, okay, let me see. I was a little shaky only because we do have Lennar, and I think we still have CBRE in our portfolio, if I'm not mistaken. And, you know, I didn't want it to be too many real estate related or real estate companies, but I think one of the things that I found out about Milrose is as a real estate investment trust, you're always a little curious as to where the money is coming from. And it's very heavily backed by some really large capital funds. Like you think about
Mhm.
Vanguard and BlackRock and you know, some of these really big institutional companies, and that says something, right? You know, that gives a little bit of credibility. You know, it's a good sign because it means that, you know, they're really believing in in the asset. One of my concerns though is as an offshoot of Lennar, I got the impression it was really trying to position itself away from Lennar as more of a standalone type organization, and that essentially it's looking to move into the global markets. And that, for me, creates a lot of uncertainty. You know, land right now, I mean, you have so many foreign or national or global investors all throughout the United States acquiring land. And so that really kind of gave me a little concern, and it still does because there's so much unknown behind that. So, but this was a really, really good presentation, Sharon. I think it gives some historical facts around the establishment of this real estate investment. It looks and feels like a sound investment. You know, you have some really significant players like Motley Fool making the recommendations about the asset. So I just really want to share my insights around it.
Thank you. Thank you for that. I
That's it.
read that too. Read that
Mm.
too, but it never occurred to me to say anything. Was someone else going to make a comment? Mia, awfully quiet.
I'm sorry. Did you, I just got back to my computer. I missed what you asked.
I was just asking if you had any comments about Milrose and
No,
us.
I think you did a great job. I think it was hold on one second, Dr. E. Oh, I'm sorry. I hit my computer. No, I thought that you did a great job, Sharon. I think that to the same comment that someone else made earlier, just the state of the economy right now, and you know, with Milrose being so heavily dependent on Lennar, I think that it's heavily the real estate market is just fluctuating right now, and it's hard to make any any, decisions on anything to do with that because of where we are, as a um in the state of where we are as an economy right now. So I stand by whatever you choose
Oh, okay.
and your
I'll tell you one thing.
recommendation.
I am going to do an SSG on Lennar because I need to decide if I'm going to buy, jump in. Um, in Ann's presentation, I saw her SSG and I could see where I jumped into Amazon. In that dip, I saw it. It came live to me when Ann was making her presentation. So the question becomes, is this when I jump in on Lennar? So anyway, I'm sorry. Alrighty, ladies, there are two recommendations that are on the table. One is to buy one share of Meta. Um, I did not, I said one share of Meta. I have no idea how much that's going to cost. I'm going to look it up right now, unless someone already knows. Well,
Sharon, while you're looking that up, Sharon, while you're
yes,
looking that up, I do want to acknowledge Zelda if there's any comments and questions that she may have before she hops off.
thank you for that.
Mhm.
So the
I
stock
met
price should
Zelda at the
not,
conference too.
Oh,
the
well,
closing,
I keep thinking about Amazon though. Um, that's a really good company, and I'm kind of surprised that you all would consider selling it, um, and keeping some of the ones that you're questioning.
Remember, we
No,
didn't say sell it. We just said
we
shave
want the money.
off.
Well, Shave
Yeah.
is selling some,
Yeah.
selling
Yeah.
some shares. I guess I would say, right, because you're looking at it being overweight, but
And it's a cash cow.
you could also raise up the amounts of the other ones. So now I don't know how much money you have available, but I guess, I just feel like, are you selling your winners and keeping some losers? Zoom, like you said, what is the future of Zoom? I mean, right now it looks really good, but I see more of implementation in Amazon versus a Zoom or Lennar. Lennar is very questionable now. I guess, like you said, the Motley Fool guy gave it really good ratings, and maybe it's being influenced by the real estate market, right, as it is, but I still feel like there's so much more potential with an Amazon than a Lennar even. So I don't know. That was
So
kind of
where,
where I'm at.
so Zelda, taking your comments into consideration, great comments. Where then would you suggest we get cash to be able to buy more stock,
Well, I was thinking of
other
Zoom.
stocks?
I I I mean, if you
So
really
trim
had to
Zoom is what you
sell,
suggest.
I mean, how much, if you found a smaller cap company, now I guess it would take some time and digging to find a smaller cap company which costs maybe $30-$40.
That's Milrose.
Well, Millrose is a REIT, so Better Investing doesn't even consider REITs. Because you're selling Amazon because it's not fitting in with the recommendations of Better Investing, but then you're buying a REIT which doesn't fit into that.
But we got the REIT because of Lennar.
Right. I understand that. So Lennar was a gift basically, but now you're buying more, so you're spending money to buy more on something that doesn't really fall into the guidelines, but you're going to sell a winner, a workhorse. Not all of it, I know you're going to trim it, but that's all I'm saying. like comparing the gains of an Amazon versus a REIT. The REIT you're getting because it gives off a dividend, but is it better investing is growth stocks?
But
You
it's
see it as
more
a
than
growth.
just the dividend. I don't mean to cut you off. It's more than just the dividend. It is a stock that has had major growth and that it is poised to grow in the next probably in the next 5 years. So I hear what you're saying. I'm just saying that right now it is a potential winner in terms of on two fronts. One is, yeah, it does give a great dividend. The second is that there's going to be good growth potential.
But Sharon, she makes a very good point, which I did not hear that before, in the fact that it is a REIT. I didn't realize it was a REIT.
Oh yeah, I made that part of my recommendation.
Sharon, I might have dozed off or something. I didn't hear that. But
I
again,
mean,
that's why we are an investment club for education purposes only. And anybody listening to this, you just want to make sure you're very clear. This is conversation about education, and we're not recommending buying or selling any stock for anybody who's listening. This is an education club for better investing, and this is really great dialogue because it helps us to look at uh, different perspectives from different members and also guests. And so, I still think that we should make that move, but at the same time, take everything that we're hearing into consideration. Thank you.
right. And the big thing is too, it's a very small and will continue to be a very small part of our portfolio. Okay,
So we
more,
have a motion and a second, I think.
you're right.
Now we've had dialogue. So
Okay, so let's take Meta first. Wait a minute. I'm sorry. We had a first and a second on Melrose, right? And we've had discussion. All in favor of saying yay for purchasing 5 shares of Melrose Place Properties.
Aye.
aye.
I
I'm going to say aye.
Aye.
Okay. Ayes have it. Is Carolyn still here? Did I hear anything from Carolyn Modest? Okay, well, we have 5 ayes. Okay, 5 shares. I have that marked down. Well, the next thing is that there also is a recommendation on the table to buy 1 share of Meta. Oh, let me say this. Right now, Melrose is I should multiply it's like $125, $150 that we're talking about spending. And there is a recommendation on the table to buy 1 share of Meta. Meta is $616.81 right now. Now, we have, if you choose, and I wish we have enough money to buy 2 shares if you like. I'm just saying. But the recommendation on the table is to buy 1 share of Meta. Do we have a motion? We have a recommendation to buy 1 share. The question is, do we have a motion?
I think we missing mine. Oh, I'm sorry. It looked like it was frozen for a bit. Sorry about that.
Oh, you didn't hear what I said?
Okay. You said there is a recommendation on the floor to buy 1 share of Meta, but we have enough funds for 2.
Yes, sir. Yes, ma'am.
Okay. All right, great. So it's been motion and second, correct?
No, who, it was a recommendation to buy 1 share.
Oh, okay. Then I'd like to make a recommendation to purchase 1 share of Meta
Okay, very good. At the $616 or at
at the,
market. At market?
yeah, market
Okay.
price. Yes.
Is there a second to that?
Sure. I'll second.
Okay, very good.
It was my recommendation though, wasn't it? So can I second it?
Doretha, I'll second it.
Okay, thank you
Thank
so
you,
much.
Yeah,
Doretha.
yeah, she could have seconded, even though your
Okay.
your recommendation, you could have made the motion and the second, but Doretha seconded. Thank you.
Okay.
Okay, very good. All right. Is there any discussion? We have a motion and a second. Is there any discussion about buying one share of Meta at market price? Okay, I hear no discussion, right? I hear no discussion. All right, let's call the question. All in favor, say aye.
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 Okay.
Okay, very good. So I have that I am going to buy one share of Meta and 5 shares of Melrose. How awesome is that? Okay. Did we lose someone? All
I
right.
believe we lost Carolyn.
Okay. Okay. So stock watchers report. Am I on here? Because I'm not prepared to talk about anything. And Carolyn is gone. So this is the thing that I wanted to make sure. Stock watchers report was seems like a lot of conversation at several of the classes that I was in at the BI conference. And I don't think we're in bad because I only see 4 stock that we have on the stock watchers list. But what they were saying is that you should not have a long stock watchers list. You should have stock that you either don't have the money to buy now, that you're waiting for the price to come down or for it to be affordable, the PE to come right, correct? But they're saying you should have stock on your, you should have companies on your stock watchers list that you're ready to pull the trigger. They should not be rolling over every month, every month, every month. And that's what we've had. I bet you we've had all these same 4 on here every month for 6 months.
Yeah.
So we need to go ahead, do a deep dive on each one of these and make a decision, buy them or not. That's all I wanted to say.
Yeah.
Okay. So, is there any old business? Hearing none, let's move forward.
Yes,
Go ahead.
I'm not sure if it's old or new, but I'm glad you mentioned about the meeting because it would be great if you and Zelda could give us an update on Tuesday for our education meeting in terms of some lessons learned or some best practices like you just did just now regarding the stock watchers report from the BINC annual meeting.
So, Zelda will be the highlight of the meeting. Are you going to let her do her book review?
Yes, but in addition to that, I think it's a good education opportunity between the two of you, since both of you were at that meeting, to bring us, rest of us, up to speed in
All
any
right.
way you choose.
You okay with that, Zelda?
Yeah, sure.
Okay, very good.
How much time should I spend on the presentation and how much talking about the better investing, the bank?
And
Like 10
Yeah, I
minutes?
think that. Yeah, I mean, I think that's sufficient. Sharon, also, depending upon how much you want to share, in terms of best practices, I think for the rest of us, we are usually in about an hour. Sometime if the video may go over, we let it play out. But I think that if there's 7 of us, 7 of us at 5 minutes and you take 10, I think that would be sufficient.
10 for bank and then 10 for my presentation.
That's not what I meant, but listen, Zelda, you've been on all these calls with us. You can find a way to make it work. Let's say 15 minutes, because again, the rest of us, we give a short update on whatever it is we're reading, whether it's an article or a website or video. I usually play a video at the end and just let it play out. So everybody else, I think if we take, 2 to 4 minutes to give our update on whatever we're learning. But yeah, I think if everybody else is good with it, I think 15 minutes for both would be good.
Okay.
However you want to present the information separately.
Okay, you
We
said
will-
15 minutes for both. She gets 7 and I get 7, or I get all 15 minutes?
No, I'm saying we can give her 15 minutes. She's got a book update to do and the annual. So I'm suggesting if we give her 15 minutes between the two of those, that's still a lot of time
Yeah.
between the two of those. And Sharon, you might want to just use your update as the annual meeting versus if you want to give an article too or anything else that's educational, it's up to you.
Okay.
But like you said, the focus will be on her as a potential new member in terms of giving her an opportunity to share.
All righty then. Very good.
Okay, sounds good.
So did we have anything on the agenda for new business? Well, so I said it, but I wanted to make sure that I was looking for Zelda the whole time. And the way that I found her was one of the speakers at one of the last events, I think it was dinner, called her by name as a supporter of his organization. And so I saw where she was sitting and I zoomed from my table across the room to try and catch her. So anyway, I was able to find Zelda. So I just wanted to make sure you knew. Um, so I'll let that go because I harassed another man to try and get him to show me FinViz to make me understand. Poor man. But anyway, so is there any other new or old business?
So did they set a date or a state of the next bank meeting?
So I didn't see one, but what I did hear and understand that the next meeting is going to be virtual. Is one of the things that they mentioned. But
Right.
I
They got
did,
to rotate virtual in person, I think.
yeah,
Oh, okay.
yeah. And that's nice. So anyway, that'll be great. That'll be really great. I don't know where the actual in person is going to be. Now, I don't think we have any guests. I don't consider Zelda a guest. Do we have any guests to acknowledge? Okay, are there any questions and closing remarks? Alrighty then. Hearing none, I guess that means we're getting ready to close out this meeting. Meeting adjourned. So, I know that you all see at the bottom of the agenda the next set of meetings, the next general meeting, the next education, and the next executive officer meeting. So, if there are no questions and no closing remarks, do we have a recommendation to adjourn the meeting?
I recommend that we adjourn the meeting.
Do we
I
have a second
second.
for that? Okay.
Yes.
So, very good, ladies. And so all in favor say
Aye.
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 Bye.
Okay.
Great
Very
meeting,
nice.
ladies.
Good
Thanks,
meeting,
Yes.
everyone.
Good
ladies.
night.
Great
Yeah.
meeting.
Thank you
Thank
so
you.
much.
Looking
Thank
We'll
forward to
do it
you.
seeing you on
again.
Tuesday.
Yes.